Hello, everybody. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are mixed today. Dow Jones is down 0.5%, Nasdaq is up 0.8%, S&P 500 up 0.2%, Russell 2000 down 0.3%. Excluding Apple and Google, which both surged due to a news that we're going to discuss, markets would have been down today. We're going to talk about the JOLTS numbers later on. Oil is down 2% to $64 per barrel. Yield curve is down substantially, 678 basis points, depending on where you look at the curve. 10-year treasury is at 421. You can see on this S&P 500 map that Apple is up 3%, Google is up 9% due to a news that relates to both of them that we're going to discuss. Tesla is also up 3.6%. Everything else is pretty much down or flat. Let's read our daily article. From Tokyo to London, bond investor fears over fiscal discipline leave markets on edge. A degree of calm settled on the world's biggest bond markets on Wednesday, but concerns about the fiscal health of big economies from Japan to Britain and France kept long-dated borrowing costs pinned near multi-year highs. Worries about Japan's fiscal position were revived after Prime Minister Close Aide said he intended to resign from his post, pushing Japan's 30-year government bond yield to a record high, well above 3%. That came a day after borrowing costs, which set the tone for lending rates for corporates and consumers, rose sharply in France and Britain, while sterling tumbled too. The economic reforms needed to really cover increasing debt are lacking, and the capital market sees that, Deutsche Bank chief executive said at a conference on Wednesday. That's why I always say that the capital market is a good reflection of the political reforms that need to be implemented. So we should take it as a bit of warning and not just duck away and say nothing will happen. A reshuffle of British Prime Minister top team of advisors on Monday renewed the focus on fiscal challenges given Britain's high levels of borrowing and slow growth. In France, Prime Minister François Bayrou is expected to lose a September 8th confidence vote he called in an attempt to win backing for an unpopular debt reduction plan. Wow. The U.S. Treasury market, considered the bedrock of the global financial system, meanwhile, has also seen pressure from worries about high debt, the impact of tariffs on inflation, and concern about the independence of the Federal Reserve. Britain's 30-year gilt yields briefly touched their highest since 1998 at around 5.75% and were last down 7 basis points on the day as some stability returned to bond markets. Speaking to a parliamentary committee on Wednesday, Bank of England Chief Andrew Bailey said it was important not to put out too much emphasis on 30-year borrowing costs, as such long-dated bonds are not currently being used to raise funds. Well, I mean, they kind of compete with the 10-year, 20-year, so that's a dumb comment, I think. It also matters the insurance companies, pension funds, so they're actually very important. 1 second. All right. Euro area bond yields fell too, although French 30-year borrowing costs held close to their highest level since 2009, and German equivalents were near 14-year peaks. Pressure everywhere. Rising yields are a headache for governments that face higher spending needs and already hefty debt servicing costs, just as they prepare to issue more bonds and face political obstacles to their efforts to get budget deficits down. Britain said on Wednesday it would deliver its budget on November 26, as investors continue to speculate about tax rises that could dampen economic growth. The 30-year Treasury yields, meanwhile, touched the closely watched 5% level that investors reckon hurts risk assets for the first time since mid-July. When a bond yields rise, its price falls. Analysts said that fears that the U.S. government may have to give up revenue from tariffs if they deemed illegal have added to the pressure in the Treasury market. That's bullshit. The current dynamic is further evidence that investor appetite for ultra-long paper clearly waned, not only from private investors, but also from institutional players who typically provide a more stable demand base for this segment, said Dario Messi, head of fixed income research at Julia Baer. Markets nevertheless calmed down as London trade progressed, with Eurozone bond yields last lower on the day. US and UK 30-year yields have retreated from their highs. A hefty pace of bond sales this week had pressured markets on Tuesday, analysts noted. Fred Repton, portfolio manager at Neuberger, said Tuesday marked a record day for European bond sales just after investors have ramped up their bets on US Federal Reserve rate cuts. While that was likely a key driver of Tuesday's sell off, market participants are again focused on deficits and political risk as this theme is likely to continue far into the year, he said. All right. Now, obviously, one of the things that drives the macroeconomy is jobs. This week is jobs numbers. Today we got the JOLTS. Tomorrow we're going to get ADP and the initial claims. And then Friday is the non-farm payrolls. So let's read about that. U.S. job openings decline in July, hiring lackluster. U.S. job openings fell more than expected in July, and hiring was moderate, consistent with easing labor market conditions. Job openings, a measure of labor demand, dropped 176,000 to 7.181 million by the last day of July. The Labor Department's Bureau of Labor Statistics said in its Job Openings and Labor Turnover Survey, or JOLTS report, on Wednesday. Economists polled by Reuters had forecast 7.378 million unfilled jobs. Okay. I mean, it's not that big of a difference, I guess. And I think August may see a bit of an uptick, but that's just the forecast. Hiring increased 41,000 to 5.3 million in July. Layoffs rose 12,000 to 1.808 million. The labor market has slowed, with economists blaming President Trump's sweeping tariffs. Labor supply has also declined amid the Trump administration's immigration crackdown. A Reuters survey, I think the impact of immigration crackdown on labor supply is it removed a massive inflow, but I don't know if they're actually deporting that many people. I think it's in the tens of thousands range. A Reuters survey of economists expects the government's closely watched employment report on Friday will likely show non-farm payrolls increased by 75,000 jobs in August after rising 73,000 in July. Employment gains averaged 35,000 jobs per month over the last 3 months compared to 123,000 during the same period in 2024, the government reported in August. The unemployment rate was forecast to climb to 4.3% from 4.2% in July. Fed Chair Powell last month signaled a possible rate cut at the U.S. Central Bank's September 16-17 policy meeting, acknowledging the rising labor market risks, but also added that inflation remained a threat. Now, there's one more person who threw their hat onto this camp. Fed hawk Musalem opens the door to possibility of rate cuts. So this guy went on CNBC and talked for 10 minutes about a month ago. How he wanted to hold some more, and I guess he's changing his tune now too. San Luis Fed Reserve President Alberto Musalem said Wednesday that he expects the job market to cool gradually and downplayed long-term concerns about inflation, an evolving stance that could open the door for support for rate cuts this fall. Quote, with the pace of hiring low, any increase in layoffs could produce a more substantial labor market weakening that would occur in a more active market. Musalem said in a speech that Peterson Institute in Washington, D.C., quote, while I'm not hearing from businesses about an imminent increase in layoffs, real GDP growth that is somewhat below potential and profit margin pressures related to tariffs could contribute to such an outcome. Musalem appeared, GDP now estimates something like 3.5% growth for Q3. So I don't know if the GDP growth really is below potential right now. Musalem appeared less concerned in his speech about inflation, saying he expects the effects from tariffs will work through the economy over the next 2 to 3 quarters, and that the impact on inflation will fade after that. It was a notable shift from Musalem, a Fed hawk who has been warning this year about the potential for elevated inflation risks. Yeah. That's a 180. The Fed next meets on September 16 and 17. Investors widely expect the central bank to make its first cut in 2025. Fed Governor Chris Waller on Wednesday reiterated he wants to cut rates at the Fed's next policy meeting because he's concerned that the job market is weakening and wants to stave off any real drop. I've been clear that I think we should be cutting by the next meeting, Waller told CNBC in an interview. The labor market has come in much softer, And you want to get ahead of having the labor market go down because usually when the labor market turns bad, it turns fast in a nonlinear fashion. It doesn't just kind of creep up. Waller noted that he sees multiple cuts over the next 3 to 6 months to get to the so called neutral rate of 3%, the level on the Fed's benchmark interest rate designed to neither spur nor slow economic growth. Quote, I think we need to start cutting rates for the next meeting and that we don't have to go in a lot of sequence of steps. We can kind of see where things are going because people are still worried about tariff inflation, end quote, he said. There were other signs Wednesday of increasing support for a rate cut among central bank policymakers. Atlanta Fed President Raphael Bostic said he's still concerned about the impact of tariffs on inflation and keeping inflation expectations in check. But he also noted that recent signs of cooling in the job market warrant a rate cut because if the job market were to turn, it could deteriorate quickly. Okay. Treasuries rebound after job openings data confirm slowdown. Treasury yields declined Wednesday after a weaker than expected report on hiring and firing by U.S. employers in July caused traders to almost fully price in a Federal Reserve interest rate cut this month. Contracts for predicting Fed moves pricing about 95%. Contracts for predicting Fed moves pricing about 95% of a quarter point rate cut this month and ramped up wagers on at least 2 cuts by year end after the JOLTS report showed that job openings declined more than estimated while layoffs exceeded the median survey response. The jump in the rate cut expectations arrested a sell off in long maturity treasuries that had lifted the 30-year bond yield to just shy of 5%, the highest level since July. The 2-year notes yield touched 3.60%, the lowest level since early May. Yeah, that's pretty amazing. So the 360, the gap between 360 and 437 is really large. I mean, historically very large. So the Fed has some catching up to do according to if they want to catch up to markets. Expectations of Fed rate cut rocketed higher in early August after U.S. government compiled employment data showed a slump in job creation over the previous 3 months. Jobs data for August are slated to be released Friday, and the JOLTS data was consistent with the weakening labor market. Quote, the expectation is that the Fed is going to move in September, and the Friday data is important. Some chief investment portfolio strategists, America's at BlackRock, said. For policymakers to opt for something other than a quarter point rate cut on September 17, August employment data would have to be very strong or very weak. Yeah. If it comes between 0 to 200,000 on Friday, I think a 25 basis point cut. And then we'll see the tail end of either. In July, the majority of Fed policymakers viewed the policy rate setting at 4.25, 4.5 as appropriate. St. Louis Fed President Musalem reiterated that view Wednesday before the JOLTS data were released. Fed Governor Christopher Waller, who dissented from the central bank's July decision to keep rates steady in favor of cutting them and has been among Trump's candidates to succeed Powell as chair of the central bank, reiterated Wednesday on CNBC he favors cutting rates at the next meeting on September 16, 17, and further in the coming months. Treasuries were 3 to 5 basis points lower on the day after JOLTS data after erasing what remained of earlier increases. The market may have benefited from recent positioning shifts. JP Morgan's weekly Treasury client survey and CME Group's Treasury futures open interest data indicated that traders cut long positions and added to shorts over the past week. Okay. Now, company-specific news. Pfizer defends COVID shot, says Trump deserves Nobel Prize. Jeez. Pfizer defended the research supporting COVID vaccine in a statement on its website in a direct response to a social media post by President Trump over the weekend questioning whether drug companies were withholding information about the shots. The company is dedicated to continuing to provide clear, factual data to the public, Pfizer's CEO said in a statement, adding that data on Pfizer's COVID shots have been disclosed in more than 600 peer-reviewed publications. Burla also praised Trump's handling of Operation Warp Speed, which spearheaded development of COVID vaccines, saying the effort would typically be worthy of the Nobel Peace Prize given its significant impact. Vaccines have become a political flashpoint in recent years, with pundits questioning widely accepted evidence about their safety and efficacy. The Trump White House has amplified those concerns, particularly after appointing Robert F. Kennedy Jr., a vocal vaccine critic, as the nation's top health official. The changes have forced vaccine manufacturers to defend their work as they try to hold on to waning public trust in their products. Under Kennedy, U.S. health officials have dramatically scaled back on the number of people who are eligible for COVID vaccines. He ousted the head of the Centers for Disease Control and Prevention and has appointed vaccine critics to serve on an advisory panel that plays an outsized role in determining who gets shots across the country. Trump said in his post that while many think COVID vaccines are a miracle that saved millions of lives, others disagree. The president added that Pfizer and others were keeping extraordinary information about the shots to themselves, and the lack of transparency was destroying the CDC. Pfizer said it agrees with Trump's call for transparency. Burla pointed to a website from the company that has research about its shots, adding Pfizer plans to add more information and studies by the end of the month. The CEO has said he frequently reminds the president of Warp Speed success, telling analysts in April that he believes it was unfair Trump didn't win a Nobel Prize for his leadership. So, I guess one interesting sentence here is the president added that Pfizer and others were keeping extraordinary information about the shots to themselves. Why would that be the case? Okay. Ford, Kia, Hyundai sales charge higher in August, shaking off tariffs and fueled by EVs. Ford, Kia, and Hyundai sales revved higher in August as consumers shook off tariff effects for now and dove into EVs before tax credits expire. Ford reported on Wednesday that U.S. sales in August jumped 3.9% compared to a year ago to 1.492 million vehicles sold. Powering the gains were Ford SUVs, Maverick pickups, and EV sales, the company said. The compact Maverick pickup sales surged 16.4% to 12,000 units sold, making a record August sales month, Ford said. Ford's SUVs like Explorer Bronco climbed 9% in the month to 73,000 units sold, making it Ford's best August for SUV sales in 22 years. Wow. Not surprisingly, sales of EVs like Mustang Mach-E up 35% and F-150 Lightning up 21% also spiked nearly 20% to another record August of 10,671 units sold. Automakers like Ford are raking in EV sales ahead of the expiration of the federal EV tax credit on September 30th. Kia also reported big sales gains with its EVs. Kia said full-size EV9 hit 2,679 units sold in August, up 54% compared to the prior month. The mid-size EV6 and compact Niro EV notched sales gains of 39% and 57% respectively month over month. Kia said it was the fourth consecutive month of EV sales gains. Overall, Kia US sales jumped 10% year over year in August, with the aforementioned EV9 and Kia Sportage SUV having their best sales months ever. Hyundai said sales rose 12% to 88,500 vehicles, which the company said it was its 11th straight month of sales gains and an August sales record. The company said August sales records for Elantra and Elantra hybrid sedans, the Santa Fe hybrid, etc., a couple of EVs. August was an exceptional month for us, with retail and total sales pacing well above our previous best August results, said Hyundai, a North America CEO. This momentum keeps us firmly on track for best year ever. Hyundai said its electrified vehicles, which include both hybrids and full EVs, accounted for 32% of all its vehicles sold, with its volume Ioniq 5 EV sales surging 60% year over year. Yeah, I mean, look at these numbers. Tesla sales are dropping year over year, and everybody else is taking share. Hyundai, GM, Kia, Ford EVs taking share from Tesla. Amazing. All right, now Apple and Alphabet news. Oh, Zachary, thank you very much. Zachary just tipped $10. Thank you, Zachary. Appreciate it. All right, let's go to Alphabet and Apple. Alphabet stock soars after judge doesn't force Google to sell Chrome browser in landmark antitrust case. Alphabet stock rose 8% Wednesday after federal district court judge ruled late Tuesday that Google wouldn't be forced to sell its Chrome browser after ruling divestment a poor fit in a landmark antitrust case. The ruling from District of Columbia Judge Amit Mehta said the company will have to share data that helped it hold on to its search monopoly, but saw Google avoid the harshest potential remedies. As part of the decision, Meta ruled that Google can continue to make payments to distribution partners for preloading or placement of Google Search, Chrome, Gen AI products. That allows Google to continue to make its $20 billion per year payments to Apple in exchange for the iPhone maker using Google Search as the default search engine in the Safari browser and Siri. Apple's stock rose almost 3% on Wednesday. The Justice Department had pushed for a forced sale of the company's search business and for the judge to order an end to multi-billion-dollar contracts that have all but assured Google's market dominance, moves the judge denied to make. I don't know. I think the ChatGPT threat to Google is actually very real. So, plaintiffs have not shown that their behavioral remedies will be ineffective without the immediate divestiture of Chrome, Meta said. The plaintiffs have not shown that their behavioral remedies will be ineffective without the immediate divestiture of Chrome. The court's task, Mehta said, is to discern between conduct that maintains a monopoly through anti competitive acts as distinct from conduct that fuels a monopoly's growth as a consequence of a superior product. Quote, after two complete trials, this court cannot find that Google's market dominance is sufficiently attributable to its illegal conduct to justify divestiture, the judge said of Chrome, adding that such radical structural relief would require a more heightened causal connection. Judge Mehta also declined to grant the DOJ's request for a contingent divestment of Google's Android operating system, writing that the government did not present any evidence to justify a contingent structural remedy. Throughout the decision, the judge noted the rise of search competition posed by generative AI, which he said presents, quote, strong reasons not to jolt the system and to allow market forces to do the work. Exactly. And that's exactly. While Google will be able to keep Chrome and Android, as well as continue making payments to distribution partners, the company also has to make a number of changes. The search giant is barred from entering exclusive contracts related to distribution of Google Search, Chrome, Google Assistant, and Gemini. Google also can't condition the licensing of its Play Store or any other Google app on the distribution or preloading of other Google services or condition receiving revenue, sharing payments from one Google app on the placement of another app. Yeah, that sounds like fair to me. All right. And Apple stock is also up. Apple dodged $20 billion hit thanks to Google antitrust ruling. Apple dodged a major gut punch on Tuesday after a federal district judge ruled that Google can continue to make revenue sharing payments to distribution partners for the placement of preloading Google Search, Chrome, and Gen AI offerings. I think we covered this mostly. Let me see if there's anything else. As part of the ruling, Google will be limited to 1 year agreements, allowing Apple to potentially renegotiate the terms of its revenue sharing deals. Google also can't force companies to keep competing apps and services off their devices, though Apple already provides access to Google Gemini rival ChatGPT via its Apple Intelligence platform. Google previously stated it would appeal Meta's initial ruling that found the company operated as an illegal monopolist. Either way, though, Apple is back on solid footing after years of uncertainty surrounding its Google deal. Cash from agreement is accounted for as part of Apple's services business. In 2024, Apple's services segment brought in $96.2 billion. At $20 billion per year, Google's revenue sharing agreement made up some 21% of services revenue. That's amazing. It's important to note that the $20 billion figure is an estimated for 2022, found in antitrust court documents could be higher for subsequent years. BofA analyst Wamsi Mohan wrote in Investor on Tuesday that the ruling is a win for Apple and raised the firm's price target. While details and nuances of the ruling and their implications on Apple are still to be determined, and Google has the option of appealing this decision, in our opinion, we do not see an immediate material change to the current Apple-Google relationship and payment structure, the analyst added. Okay. Um, yesterday we talked about some manufacturing plans potentially after um, all the policy changes to bring to onshore manufacturing. So I guess there's one news here. Gilead starts building manufacturing hub on their $32 billion planned U.S. investments. Gilead Sciences said on Wednesday it has started work on a new pharmaceutical development and manufacturing hub at its headquarters in Foster City, California, as part of its planned $32 billion investment in domestic manufacturing. Major U.S. drug makers such as Eli Lilly, Johnson Johnson, Merck, and Bristol Myers Squibb have also announced big investments this year to boost domestic production due to tariffs. In addition to Gilead's Bay Area facility, the company is currently developing two other sites, a research building to accelerate scientific discovery already under production and construction, and biologics manufacturing facility to expand domestic production capacity. Gilead said on Wednesday its investments through 2030 will create more than 3,000 direct and indirect jobs and $43 billion in value to the U.S. economy. Okay, I mean, we'll see about this part, but so 3,000 through 2030, 5 years, 600 jobs. Yeah. Okay. All right. Instagram is finally launching an iPad app. After years of people constantly nudging Instagram about releasing an iPad app, the social network is finally launching one today. I wonder why they waited so long. This means users will no longer need to use the iPhone app, which is not optimized for larger screens, or Instagram for web on the iPad. The new app defaults to the Reels screen, allowing you to scroll up and watch short videos on a larger screen. The iPad app has nearly all the features of the phone app when it comes to consumption, stories, etc., etc. Instagram's feed on iPad has three options. I don't want to go into these details, but while Instagram has existed for nearly 15 years, the company didn't make an iPad app a priority until now. Instagram head Adam Mosseri said multiple times in the past that the company was in no hurry to develop an iPad version. Earlier this year, the information reported Instagram was finally building an iPad app. Yeah, interesting. It doesn't. I don't think the article says why. Okay. All right, we'll keep it. I mean, on Insta. I mean, I guess on Meta, Zuckerberg's Threads app. Threads app's daily active users in the US is now catching up to X, which is amazing. Because ChatGPT, I think, like I use ChatGPT 10 times more often than X now every day. And like I open up 10 times more often. Every time I open, I spend way more time than I spend per use on X. So both ChatGPT and Threads are stealing share from X, which I think may have turned down now. I think the daily active users in the US may have turned down year over year. I think it was down 15%, according to a source in June of 2025. So it is a dead loaded company. So we'll see how that turns out for them. On that note, thank you very much, everybody. And I will chat with you all next time. Take care.